You got uncertainty out there. Obviously, we don't know what's going to happen in Ukraine with Russia. Hopefully it ends quickly. It ends soon. It may not. Inflation obviously is not going anywhere. 11 million open jobs in this country. The Fed raising rates. Wow. What a time to do what you do. How do you see the world right now from investing? Is it better safe than risk it and be sorry, or is now the time to take more risks?
Good to see you this morning, Brian. Yeah, this is the most complex investing environment in my career. There have been 13 geopolitical events since Pearl Harbor. I've been investing in 7 of them, and they always feel like this. They feel, you feel despair, can't see through to the other side. And so now is actually the time, I think, to begin to add some risk back into your portfolio. On average, of those 7 that I've been investing in, the market was up 14.2% 12 months later. So we are in kind of late mid-cycle, and the PMIs are rolling over. So I think you want to look for, you're going to expect earnings revisions to be revised down negative. And so you want to be looking for reliable growers that are not trading at ridiculous multiples. So some of the large cap tech names that in the software space, real CapEx spending in tech was up 12.4% last quarter on a real basis. So there's a lot of opportunity, and many of those stocks have gotten hammered.
Yeah, and it's been tough, Karen. And you know, in your industry, I would say probably anecdotally 30 to 40% of people have not invested in an environment like this, an inflationary environment, a Fed rate hike environment. We've never seen a Fed balance sheet like this. So the historical models maybe don't go out the window, but at least they pull the shades. I mean, what's your best advice for our viewers right now on what to do?
Yeah, we definitely are getting hit with a full scale of whammies, and investors are nervous about that. But I always tell investors there's a lot of unknowns. Stick to what you do know. And there's a lot of companies out there that have some good earnings. So look for those companies that are still earning, and look for companies that pay dividends. If we're worried about growth, in the future, and we're discounting at a higher rate, then there's a lot of companies out there that are paying dividends and are raising their dividends. And that's cash now. So there's nothing wrong with going towards companies that are paying dividends, and I advocate that. And actually, as some of those large tech companies are paying dividends, so you're getting your cake, and you have your cake and you get to eat it too.